Um, okay, I think I'm recording. I hope you all had a great Easter holiday. Uh it's Easter night now. I've just got back from my brother and sister-in-law. We had a great day, a lot of family. Watched the end of the Masters. I think I got uh didn't do too well in my Masters pools. That's the way it goes. But the purpose of this video is to go over pages FX, some foreign currency transactions, problems 29 and 30. We did 29 in class. We didn't get to 30. So along with this video, I'm sending you an Excel spreadsheet that I've prepared, I pre-populated, and I'm going to send you a copy of page 29 and 30. So I think it'd be best if you're watching this video to have both of those things printed out. Okay, that'd be probably the best way to go about it. Again, so we'll do, I think, foreign currency. I think they bought surfboards, and then we had foreign currency borrowings. And that's this is for the test on Thursday, the exam on Thursday. So I'm going to share my screen. Let's see if we can find it here. Let's see what I got here. All right, so okay, I'm moving over here. I got two screens. So it says Prop 29 says Spindler, a U.S. company, presumably U.S. functional currency, imports surfboards from a supplier in Brazil and sells them in the United States. Purchases denominated in terms of the real or reais, which is BRL. During 2020, Spindler acquires 200 surfboards at a price of British Brazilian reais of 1,600 per surfboard for a total of 320,000 British reais. Spindler will pay for the surfboards when it sells them. Okay. So then A, it says, assume Spindler acquired the surfboards of September 1 and made payment on December 1. And what are the effect of the exchange rate fluctuations on reported income? So when they buy it, so I listed out the exchange rate here. So this is $0.23 buys, I'll even write it in. This is how many dollars buys one reais. So it costs like 23 cents to buy a reais at September 1, 22 cents to buy one at December 1. So that means that the dollar appreciated. By 24, costs 24 cents to buy one reais at December 31. That means that the dollar depreciated, and then at March 1 it cost 0.225, and that appreciated because you get a reais for less. Okay. So, but anyways, at let's see what we can do here. So acquire, we had 320,000. They said the cost of the surfboards was 320,000. All right, reais at 23 cents per reais, that costs 73,600. That's what we initially record them at. Okay. On December 1, we make the payment, which is still 320,000 reais. But we can acquire those cheaper because it now only costs us 22 cents to acquire one reais. And so that's 70,400, and that's a $3,200 gain. Okay. So that is A. And does that make sense? Let's do this. Stop the share there. So I'm saying that the dollar appreciated. This is sort of a buy transaction. The dollar appreciates and then we get a gain because of that. That makes sense to me. Now, if we go back to that slide I showed in class the other day, See if I can do that. That's my Zoom. One moment, please. All right, so that's a nice new feature. So the dollar appreciated, which means the foreign currency depreciated. This is a purchase. Again, we bought them. So if the foreign currency depreciated on a purchase, we get a gain. Okay, we have a gain. All right. So this is a good slide in 7.19, which is on Canvas. So we'll do that. Okay. Now we'll go back to the Excel spreadsheet. All right. Now B, I don't even see C. Okay. Assume that Spindler acquired the surfboards in December 1, 2020. I mean, maybe I didn't do C. Well, we'll do it real time. Spindler acquired the surfboard in December 1, 2020, made payment on March 1. So what's the impact in 2020, 2021? So the impact in 2020 is we bought them on December 1. So it's the same price, it's the same exchange rate as up here. So it's this. It was 320,000 reais at December 1. It was at 22. We can buy 320,000 reais at 22 cents a reais. That's $70,400. That's the same as that. At December 31 of 2020, we have it now costs 24 cents to buy reais. So now it costs us 76,800 to buy a reais, and so that is a loss. Look at your slide 7.119. If the foreign currency appreciates, which is what happens here, we get a loss. Okay, and so we have a loss. And the second half of that is says if we and so that we didn't pay it at this point in time, but we have to mark it to call it market the spot rate at 12/31, and so we would record that at 12/31. When we go to pay it, we compare. Well, what's the loss in 2021? Well, this is we had already factored in the again. It's going to be the difference between the exchange rate at 12/31/2021 and then March 1. So it's between the 24 cents and the 225. Okay, so we already did the. We already know what it was. It's at the 0.24, right? We can have that up here. So we know it's 76,800 at that point. Now, and then going forward to March, the dollar appreciates and then the reais depreciates because now it only costs us 22.5 cents to buy a reais. And we do the 320 times the 0.225. That gives us 72,000, and the delta there is 76.8 minus 72,000 is 4,800, and that's a gain because the dollar appreciated and the reais depreciated. Okay, so that's A and B. I thought I had done C. Well, C. Oh, I know why I didn't do C, because C is the same answer as. Well, I guess no, it's not the same answer. I think it's the sum of the 30. So the question is, if I bought these things, these surfboards on September 1, which I did here for 73.6, and made payment on March 1, which I did here, 72. It says, what's the exchange rate fluctuations on reported income in 2020 and 2021? So it's going to be, this gets me from September 1 to December 1. This gets me from December 1 to December 30. So it's the sum of these two items. So in C, it's going to be 3,200 plus, well, that's a gain, minus 6,400 which is a loss. So it's going to be a loss of 3,200 in 2020. Okay. I'll put that down here. And then they'd still, and from there on, it's only in 2021, it's going to be the gain of 4,800. So the fact that we when we pay it doesn't change what the gains and losses are going to be. All right. So let me just check that. Yeah. So it's a loss because this gets us from September 1, and I'm going through this fast, so you guys can slow it down. So from September 1 to December 1, it was the $3,200 gain, and then for the rest of the year, it was $6,400 loss. So the total check, the total effect in 2020 is 3,200 minus 6,400, so that's a 3,200 loss. That's a loss of 3,200, and then the impact in 2021 is what we already recorded here is $4,800 gain. So that's A, B, and C. Okay. Now we're going to move to 30. I'm just going to pause this recording just for a second. Let's see how I stop this. Stop the share. Was okay. I'm back. We're on problem 30. So here's the exchange rates that they give you in problem 30. Okay. 1/10 of a US dollar buys a Chinese yuan, CNY. So it'd be 10 cents. This would be 10.5 cents buys a CNY, 12 cents buys a CNY, 125 buys a CNY. And so these look like and 0.15 buys a CNY. So the dollar keeps appreciating, depreciating against this over time to the CNY, the Chinese currency. Okay, because again, we could buy right here. We can buy. Here we can buy CNY for 10 cents, but now it costs us 10.5 cents. Now it costs us 12 cents. Now it costs us 12.5. Now it costs us 15 cents. So if the dollar is depreciating, which means that a CNY is appreciating. Okay. So the first thing we got to do, and I didn't do all these. I didn't do all these on purpose because they get repetitive at the end, and I don't think but I did all the ones you need to, I believe, for the concepts. So it says we borrowed $1 million Chinese yuan loan from a Chinese bank at an interest rate of 2%. The company makes interest payments annually on September 30th, and will repay the principal on September 30, 2022. And the Peace Frog International, which is US-based company, prepares US dollars and financials. Doesn't say it, but it must have a functional currency of dollars and have a December 31 year end. So it gives you exchange rate. So let's prepare all the entries relating to this foreign currency borrowing. And I'm not worried about the B on the effective interest rate. Okay. So the initial borrowing, it's $1 million yuan times 10%. So it's in US dollars, $100,000 of cash, no payable 100,000. Okay. At 12/31, we're not paying interest expense, but we have to accrue interest expense. Okay. So we're going to do an adjusting journal entry. So it's $1 million. It gave us that it's 2%. This arrow. It's $1 million local, Chinese yuan at 2%. It's for 3 months, 3/12. So that would be 5,000 that's due in Chinese yuan. But what we owe them at that time, because at that time the exchange rate is 105, that would tell us the whole interest. Well, we don't have any interest payable at this time, but that would be the interest payable. So the sum of that you know, we record the, we figure out the Chinese piece is easy, right? It's the principal times the interest rate times the 3/12 of the month. And that's what we owe in Chinese yuan. You know, that's how you would do it in US dollars, right? But it's not in US dollars. So we owe 5,000, and at 12/31, it costs us 0.1005 to get point, 10.5 cents to get one. So that's $525. So we debit interest expense and credit interest payable. Okay. Now, so that's, we record the interest, but the other thing we have to do at 12/31 is mark the note payable to the current FX rate, because that's changed, right? Because we originally recorded it at 1, but now it's at 105. So now it's a million local currency, the CNY of $1 million, but now it's a 105 exchange rate, which is 105,000. Okay, 105,000 US dollars. The initial value was 100,000 that we recorded up here, so we have a $5,000 loss. So we increased the note payable with a credit, and we recorded an FX loss of $5,000. Okay. Then we're not assuming there's any, there's a December year end, but I guess they're not assuming there's any quarters in between. So we go to 9/30. We have to pay we have to record the interest payment. They pay it annually. We have to record the interest payment, record interest expense, and we have to mark the payable to the current FX rate. Okay. So on the interest expense, why did I do that? Well, we know it's 5,000 for a quarter, $1 million times 0.2 times 3/12. But now it's 9 months. So it's going to be 3 times 3 months. So that's 15,000. So this would be effectively $1 million times 2% times 9/12. That's the 15,000. And then the exchange rate at September 30 is 0.12. Okay. So that's our interest expense, 1,800 for the year. What we got to pay is then we get rid of the payable, which we had over here, 525, because we want to pay it off, so we debit that 525. Why is this going to be a gain? Oh, it's not a gain, it's a loss. Okay, I just wrote it's a debit, so it should be a loss. It should be a loss. All right. What we have to pay is the sum of the 5,000 of last year, the 15,000 that's due this year. That's 20,000 at the current exchange rate at September 30th, 0.12. That's 2,400, and the difference is the loss, which you could calculate, and that's with the value of how much this changed how much the 5,000 the beginning balance changed. So it was 5,000 at the beginning of the year, times now it's at 0.12, which is 600. Initially we had a value at 525, so we owe more now on that piece, and that loss is 75. So that's how you prove that. Okay. I know this is fast, but you can go back and slow it down, and you'll have this Excel spreadsheet to take a look at. Maybe I'll go over this one again. And at the end, then we have to mark the note payable to market. A little typo there. That's 15,000. So the current note payable is still $1 million. The current market rate is this is what we had at 0.12. Oh, okay, because we're at September 30th, 2021. So it would take us 120,000 to pay it off at this point in time. We had 105,000 recorded, the 100 plus the 5,000 here, these two items. So it was 105. Now it needs to be 120. Thus 120 minus 105 is $15,000 loss. So you got 15 debit FX 15, credit note payable 15, and the sum of all your entries for note payable is 100. And plus 5,000 plus this 15,000 gets to the 120,000 that you have to pay. All right. And I didn't think that I didn't keep going because I think what I did here covered all the concepts. So that is that. So I'll send this. That's the video. I'll send this to you in the morning. It's Sunday night now. I'll send this to you first thing in the morning, and you'll have the this Excel spreadsheet, the copy of the problems from the book. That way you don't have to look at the book online and toggle between. You can print both those out and watch the video. And I'm sure you want to watch this over and over again. Take care, everyone. We have class Wednesday, and I look forward to seeing you. I hope you had a great break. Take care.